What is up, everyone? Welcome back to another episode of Futures Trader. I'm here with Jim Cagnina. Jim, how are you doing today?
I'm pretty good, Aaron. How are you? How was your weekend? Everything good?
Oh, everything was good. The weekend was exciting. I'm sure we'll talk about it in terms of the futures market because we had the people speculating about the Credit Suisse situation as well as the Federal Reserve emergency meeting. So some good movement in the futures markets there. Jim, let's go ahead and play the intro for the show. And when we get back, people start dropping questions you have about futures trading, whatever you're trading in the chat, and we'll pull up your charts, Jim, and get to it. All righty, Jim. So we've got your charts pulled up. Looks like we are looking at the ES 1222. What's that?
Yeah. Okay. So this is the E-mini S&P. This is December 2022 contract. So this is kind of the main one we kind of focus on when we start. What's the S&P doing? Some folks might be more familiar with the SPX or SPY or some of those cash market equivalents. But this is the E-mini S&P stock index futures, and you can see big rally today. Which is a change of pace, right? We've been nothing but red bars for a long period of time. So this was kind of a refreshing turnaround this morning.
Yeah, and so I see Aaron Bryan in the chat's asking a good question. He says, okay, so I've been watching futures and they don't always hit the same price levels as the open market or market open. So why do they call it futures? I don't think it predicts the future.
Well, so futures markets they're different than the underlying cash market, and they're based on the underlying cash market. And keep in mind, they're 23-hour markets, right? So you have the ability to trade or go long or go short within that 23-hour period without having to have extended trading hours, or there's no difference, right? So you could always participate. It is one centralized exchange, which is another advantage over futures than some of the other underlying cash markets. Highly regulated. It's one place to buy or sell. Futures markets are dated out to the future, right? In other words, this contract we're looking at right now is a quarterly contract, right? And because it's a futures market, prices are going to be different than the underlying cash market. So you got to keep that in mind. There's going to be a difference in prices. Does the futures market lead the underlying cash market? Well, in my humble opinion, many times it does. Not always, but many times it does, especially with the volume that you get outside of regular trading hours.
Yeah, and so with the future, so say like let's take a weekend like this past weekend, for example. So essentially, the people trading the futures markets are trying to anticipate how they believe the actual, cash market, as you put it, will react to the news as it's coming out.
Well, so the way I like to look at it is when I'm day trading futures or position trading futures, I want to anticipate what the futures market's going to do. I want to use my technical analysis skills. I want to use all the economic releases that are coming out and all the stuff on the news stream to decide whether or not I think the futures price is going to go up or down, right? So that's kind of the focus here, because even though you could say it has a mind of its own, maybe it's leading, maybe it's lagging, it's still a market, and it still has tremendous amount of volume, tremendous amount of open interest, tremendous amount of notional value. I mean, a ton of notional value. So it's a meaningful place to be, and it's very liquid in most of these asset classes. So when I'm looking at this chart right now, for instance, this is a 10-minute E-mini S&P chart. I see a really nice rally. Buyers have taken over this market completely. There's no substantive retracement at this point. So when I'm looking at areas of entry, I'm forming my bias, and I'm gonna be patient, and I'm gonna come up with a game plan. And that's kind of how I view the futures markets, and I think that they're pretty important, especially when you start looking at overnight what happened.
Yeah. So why would how would you explain to someone if they were asking like looking at this chart, if you go back to where you on the left side where you have those two red candles in a row right at no, a little more left. Yeah, right there at that 20 at yeah, 20. So I guess that'd be what, 8 p.m. Eastern time, that
Yeah,
sell off would.
yeah, this is about set. Right. So right here, okay, let's analyze this. All right, great observation. Let's analyze this. Remember, this market opens up Sunday night at 6 p.m. East Coast time, right? And it goes 23 hours all the way to 5 p.m. So this is what happened on the open. And remember, there's a weekend, right, in the middle. So this is after the weekend because today's Monday. And we had some price action here. This is where we closed on Friday. I'll put my crosshairs there, 3604, pretty close to that 3600 psychological number. And then, I don't know, maybe an hour and a half into this thing, we did have sellers come in and push the market down, right? So we had that kind of early evening activity. I'm going to call it early evening. And then, oops, sorry about that. And then it just kind of rallied back up to where we started from, right? So this was speculation that happened right here. Not a lot of institutional investors probably are involved in the market overall when you can include the cash market and all the stuff that you guys are familiar with. And we came back up to where we started. We traded sideways all night, all morning long, pretty much, right? And then pre-market things started picking up. And the European market open, Frankfurt, Germany, the Eurex open, London open, didn't really have a big opinion on the stock index futures at this point. And didn't really start a trend either way. And then rally started, slow baby candle rally started pre-market here in the U.S. and kind of set the tone for the rest of the day. And I have the opening range here highlighted with a black. Let me open this up a little bit bigger so you can see it. With these kind of this black line on the top is the high price of the opening range. The bottom is the low price of the opening range. And the way I set up my opening range indicator was to say, hey, start this when the cash market opens up, right? New York Stock Exchange, NASDAQ, and all that stuff. And then give me 30 minutes worth of data, 3 bars, 1, 2, 3. This is a 10-minute chart. And this frames what we call the opening range, right? And I'm not the only guy in the world looking at this. Many traders look at the opening range for clues on what's going to happen, how big the opening range is, where we ended up in the opening range. We actually ended up in the middle, right? We actually ended up in the middle of the opening range. Then a slew of economic indicators were released, right? Construction spending, ISM, and all of that stuff. So the market took off after that, right? And hasn't cut back down. And remember, we're in this weird environment, Aaron, where bad news is good news for the stock index futures, right? It's suggesting that, hey, this inflation thing might be slowing down. The Fed might be taking it a little bit easier. So we're in this weird kind of, bad news is good news. Construction spending was weak. ISM numbers was weak. And we had this big rally and it hasn't stopped. It's still going. Buyers are continuing to push up. The R1 daily pivot was breached pretty significantly, although I could argue that this is a pretty nice actual area of support right now. I'll draw my rectangle here to kind of highlight that. And we'll see if that holds or not. We'll see if R1's not resistance anymore. It is support right now as I'm looking at this market. Up 74, huge move on the upside.
Yeah, I mean, it's been like you said, one of those bad news is good news. Over the weekend, we kind of had a litany of different headlines between people speculating that Credit Suisse was on the brink of bankruptcy, that the Fed is having an emergency meeting that's actually supposed to start here in about 20 minutes to potentially, discuss some of these things. And the way I see it is, I mean, the Fed having this meeting, I don't want to, speculate too much and people thinking, oh my God, that means they're pivoting or whatever. We don't know. But chances are, at least the way I see it, it'd be hard to imagine that they're going to come out of this meeting saying, oh, we need to be more hawkish, after everything we've seen. So what do you think, has been, you mentioned the construction spending. Is that the thing you think pushing the markets higher today, if you had to attribute it to one major headline?
Yeah, and there's other things to consider too, right? So remember, last Friday was the end of the month. It was end of the quarter. It was end of a lot of fiscal years, right? There's a lot of portfolio adjustments going on. We had a big down day. So today is kind of like back to normal, and there's also probably going to be institutional participants that are looking for repositioning things and looking for places to go. So that's one factor. Clearly, the stock index futures doesn't care about the special Fed meeting or right now. Look at the prices. I mean, there's no negative drag on this. So we'll see what the outcome is there as well. But It doesn't seem to be sweating it. It seems like the numbers, the other numbers, the portfolio readjustments are more important right now as buyers continue just to come into the stock index futures. And then the other thing to think about, Aaron, is if you look at all the currency crosses I have up here, all the currency crosses, these are most of the majors. We have the Swiss franc on the top, which is actually negative, right? Reflecting this bank situation we're talking about. The euro is positive, yen's positive, Aussie dollar's positive against the US dollar, Canadian, British pound, Mexican peso, and New Zealand. So all of the major currency crosses are positive versus the US dollar. And the US dollar has been really, really strong against these currencies for a long period of time. So that's also reacting to this idea that maybe some of this inflation stuff is under control.
Yeah, and I think that's been one of the things that, if at least part of the reason, or one of the things kind of dragging down the market has been the strength in the U.S. dollar, and you have companies like Microsoft or whatever coming out and giving warnings about how the strong U.S. dollar may impact international business. It makes sense that on a day like today, where you have the dollar down compared to all these currencies, that the market would be reacting positively to it. You have to have it both ways, right? If you're saying, that's the reason the market's down, or part of it is because the dollar's so strong, then when it's showing some weakness, it makes sense that the market's going to react positively to it.
Yeah, and there's some positive correlations to a lot of these things, especially gold. Look at how strong gold is. Gold has been, we're up 28. Look at where my cursor is. We're up $28 on gold today at that 1,700 level. And again, this is a function. Gold has been breaking for a long period of time because it doesn't do well in a rising interest rate environment, and it doesn't do well when the dollar is so strong. Let's just take a look at a daily chart real quick. Finally, we have a turnaround in gold, right? We've been just selling off, retracing, selling off, retracing, selling off. As a matter of fact, I have a series of lower highs. This X marks a high. This is, high 1, lower high 2, lower high 3, lower high 4. Now, finally, I have another anticipatory X here. We'll see if it keeps going, but buyers are coming in pretty strong now in gold, suggesting, again, a flip-flop a little bit. In a reaction to the dollar, in a reaction to the potential future interest rate picture that we're going to see right now. In any event, this is a really nice, really strong turnaround in gold futures.
Yeah, and I'm curious. I think that's interesting to me because right now it seems like it's a pretty people are willing to take on some risks. Well, I don't know, because it's mostly like energy doing well. It's not really a lot of growth and really risky stuff. So maybe it does make sense to see gold up so much. I see Beach Bum trading the chat saying, do you think fund managers went safe, risk off for end of quarter, and now they're looking for return alpha for the new quarter? Do you follow anything like that, Jim? Kind of looking at some trends as we get into new quarters or months?
Yeah, I think that's potentially right. That's potentially happened, right? And I think that there's definitely bargain hunters, right? There's definitely bargain hunters out there looking for bargains because they're out there, right? Systematically, the whole market moves in a direction, right? Bearish trend. Let's just show a daily chart on the E-mini S&P again, the S&P chart again. But within the scope of that thing, there are folks looking for opportunities. I know this looks a little cluttered, so I'm going to kind of open this up a little bit more, Aaron. But we hit a double bottom here, right? We had a low back in June, a calendar year low back in June 16th, 17th, and then we broke through it on Friday. We were resting on it. We closed below it on Friday. Now we're pushing back up again, big time. This is a bullish and engulfing candle that we see right here in the E-mini S&P weekly, a daily. I'm sorry. And we're above my area of what I was going to call area support, right? So again, this level here of 36.56 area support is we're driving back up to a minor resistance level up here as well. So I do think there is some. I agree with the listener's comment. I do think there's some of that going on for sure. But again, let's just kind of explore this chart a little bit. I mean, look at this. Look at what we're up against for the rest of the calendar year. We have 3 CPIs. We have GDP adjustments and more GDP numbers 3 times. We have an FOMC. We have 2 FOMCs. We have a midterm election. So we have a whole bunch of major things that we're up against going forward here. So again, I'd be careful to say, yeah, we're not done with the bear market, or we're done with the bear market. This number here, this CPI number, is going to be a big deal in a couple weeks.
Yeah, and I mean, I think if you look back, if you look at the chart futures, you can see right where we kind of got that CPI report last month, where a lot of people were expecting to show that inflation had slowed down for a second or third consecutive month. So if we get a good CPI report, which we're hoping for, that could give people more confidence that, hey, we've seen peak inflation. The Fed doesn't have to be as drastic, as severe as Powell's been talking. It's kind of, I don't know. I mean, I don't want to speculate too much. We hope the Fed has learned lessons of what to do, what not to do from '07 and '08. And it seems like early indications are that if we get closer to certain things breaking, whatever, that they're going to be more willing to step in and intervene. At least that's how I interpreted the meeting and everything.
Yeah, I mean, so far, every time, Jackson Hole negative, CPI negative, FOMC negative, Powell spoke again on the 23rd negative. So, either they're saying all the wrong things or they're saying all the right things, right? And I think they're saying all the right things. They're saying, hey, put your seatbelt on, guys. I'm warning you at Jackson Hole. CPI came out. I'm warning you at the FOMC. I'm warning you again that we're gonna deal with this. We're gonna deal with this. But he's used the word pain in Jackson Hole, right? And we saw the pain. So hope maybe it's working, maybe it's not. Elon Musk was out there today saying, hey, I think this inflation thing is going to slow down because I'm purchasing materials and services way out front for Tesla, and I'm seeing some relief finally. So again, that kind of information is helpful also.
Yeah, and then so what about like more specific futures markets? Like I've seen people talking about, say, like the futures market for like energy prices in Europe or whatever. They're looking out like a year out. They're saying, okay, energy prices are actually like according to the futures market supposed to regulate. Do you follow any markets like that?
Yeah, so again, we focus on CME group markets, and the CME group futures markets have every asset class you could think of. And, right now, as an example, here's a crude oil chart, right? So this is West Texas Intermediary crude oil, and this is delivered in Cushing, Oklahoma. This is basically stuff we get from the Permian Basin and Canada and these kind of areas. There's two other benchmark crudes, which are in the futures that you could trade. There's Brent crude, North Sea crude. That's also a light sweet crude. And then there's the Dubai crude, which is the sour crude, right? So West Texas is the sweetest, and then next comes Brent, and then next comes Dubai. Now they all have different circumstances around their pricing. They're correlated for sure together on a global marketplace, but they are different in prices a little bit. Those are all three good futures markets to trade. So crude oil, yes. Here's a nice chart of crude oil. We're going to take a look at this. As a matter of fact, today we have a green candle. We had buyers come in on the rumor that OPEC Plus is going to be, cutting more output coming up soon. So we'll see if that continues. The other market we look at is gasoline. This is a gasoline futures chart. It's a great market to trade also if you're tracking gasoline futures, which is one of the byproducts of crude oil. And then natural gas is the third kind of market to answer your question. This is kind of the third market that we look at. This nat gas is Henry Hub natural gas, is based in the US. There's another natural gas market in London that you could also, which is going to be priced different because they do have different constraints associated with Nord Stream and all the terrible stuff going on in Europe.
Yeah, and I mean, I think right now that was one of the bigger, that was one of the biggest, I think, bear cases for people about Europe, was looking at the energy markets, thinking, oh, is the UK, Germany going to be able to make it through the winter, all this stuff. And then I saw people posting kind of the futures markets, so as I said, for the energy prices in Europe, showing that they're all expected to fall and kind of normalize throughout the year. But yeah, this is interesting looking at the natty gas futures, because we've seen some crazy moves in the natty gas markets over since the Russia-Ukraine conflict started. Have you been watching this one pretty closely still?
Yeah, for sure. Typically we see in the fall, we see nat gas prices come down as a lot of the nat gas, typically in a regular year, normal year, I'll say, is stored, right? Either in caves or in pipelines or something, stacking up for the winter. And so this is kind of typical price behavior that you'd see in the fall here in the U.S. side. And remember, this is delivered by a pipe, and to transport it, to liquefy it and transport it overseas is happening, but it's not that easy. There's a shortage on ships. There's a shortage on mechanisms to get the actual nat gas to the ports and all of that stuff. So that's also going on behind the scenes here in the U.S. But this is pretty nice. I got a nice bottom here from I don't know, July. I'm just going to point out 5.343. This area here that's highlighted here is an area of congestion. I want to see if we can get through it to target those lows. We might kind of go sideways from here. I'm not sure, but this is a bearish market. This is all looking down, but seasonal aspect to it. Keep that in mind.
Yeah. Yeah, I mean, I think you when looking at some of these movements in the natty gas futures or whatever, it's hard because it's like as soon as it flips like on a switch from being in a bearish trend to a bullish trend, and it's like impossible for me to figure out how to time that. I mean, it looks like on that chart there, whatever that trend line it got up to kind of hit that perfectly and started trading off of it.
Yeah, no, for sure. And these are all futures markets you could literally either day trade, swing trade, or position trade on a on a regulated exchange or nearly around the clock, right? So all of these different asset classes, futures is not just corn anymore. It's not corn, wheat, or anything. It's everything. So you have currencies. Here's the Euro FX as an example, driving its way back up to parity. Is a really good currency pairs are way better. It's way better experience you're going to have, in my humble opinion, in the future side of things with the futures account than you're going to have in the over-the-counter of the market, right? Over-the-counter market is based on a dealer that's giving you a bid-ask spread that they want to give you, right? It's regulated in a different way. So there's a lot of benefits here as well. We have the whole yield curve you could trade. Here's the 30-year Treasury bond market, which is very popular to trade. Technical analysis, it works really good. A lot of volume here as well. Copper is another one that I'm a big fan of.
Wait, real quick, Jim, because I'm looking at it right now. I don't know if this is just like if I can just pull up this data on my own from CME's website, but I do see that CME has the German power baseload calendar month futures. It looks like NYMEX is the exchange it's on. Have you ever looked at those, or are you able to pull those up?
Yeah, I can, but those aren't really retail markets. Those are, so that's on the NYMEX exchange, which is a subcategory of the CME. So CME has subcategory exchanges underneath them that all trade through the same electronic Globex system. But a lot of those, there's a lot of energy. There's many energy markets at the CME group. And some of them are more of an institutional focus and a longer term trade focus. But yeah, you could pull them up for sure. But that wouldn't be a market I'd be looking for a day trade for or a swing trade for.
So those are more like institutional energy traders trading. Like who's actually trading those markets?
Yeah, so I mean, you get hedgers, right? You get maybe power supply companies might be hedging a price in the futures market. You could have long-term institutional investors, commercials involved trying to speculate as well. In those markets, I mean, you have clean energy markets. You have all sorts of different. There's many markets at the CME group, but let me just kind of show you the ones I focus on, and then I think most of the retail folks focus on. On the upper right-hand side here, there's the stock index futures, right, which we're all used to. The S&P, the NASDAQ, the Dow, the Russell. I have a couple German ones thrown in here for fun, the Eurostock 50 and the DAX. And then we have the micro version of those contracts. They're 1/10 the size. They're smaller. If your risk appetite's a little, or your account size is a little smaller, that's okay. You can still participate. We have these currency crosses. There's other currency crosses. I just have the majors up here. We have energies that we just talked about here. We have metals. If you crude, gold, silver, copper, you have micro contracts on those as well. The whole yield curve is here, Aaron. We've got the 30-year Treasury bond all the way down to the Fed funds and everything in the middle. And you can even see the yields are a tradable contract as well. You could trade yield for 30, 10, 5-year, and 2-year financial instruments. So you can see the whole yield curve right there. These are also really popular. And then cryptos, right? We've got Bitcoin, we've got Ether, and those are also tradable. And then grains are the traditional stuff we're used to, right? Soybeans, wheat, corn, they all have Z's in front of them. Meal, lumber, oats, that kind of stuff. So those are the ones that I think most retail folks focus on, and that's the one we do our opening range show around as well.
Got it. Let's see if we've got any questions in the chat. Catching up on that because we've got only about 3 or 4 minutes left. Looks like Beachbone Trading was talking about KOLD and Boyle, a way to trade those natty gas markets with some leveraged ETFs. Crypto Tour saying zoom out and the 200 moving average looks bullish. I think he's talking about the S&P futures.
Yeah, let me pull that up again. It's a daily chart. So I don't have a moving average on my daily chart right now, but again, we got to be careful, right? Because of all this data that's still coming down the pike. But you do see a really nice, this is a bullish engulfing candle right now. If we closed right here today, I would suggest that over the next couple of days, we're going to see additional upside in this market as well. Critical area here, though, we got to get through. Critical area. And from a Fibonacci retracement point of view, the middle of that blue rectangle is 23.6%. So I want to see a close above that 23.6% or 37.45 before I'm just going, my hair's on fire and I'm looking for places to buy.
Yeah, so I mean that blue zone that blue box you just pulled up, you said we would have to clear that level before you got more bullish essentially.
Yeah, I would like to see a close above this 23.6%, which is right in the middle of my resistance rectangle. And that would be a good first step, right? The next step up is that 38.2%. I think these Fibonacci retracements work really well on a daily chart, and 38.27 is what we're tracking for the next stop.
Yeah. All right, Jim. Well, I've learned a lot about the futures markets today. I hope people out there in our audience did as well. If you guys have any questions for Jim, now's your chance. We've only got about 2 minutes left. But always a pleasure, man. It's fun looking at these futures markets because it's not something that I get to do regularly.
Yeah, and if I could just kind of mention to everybody that we do, me and Tom Schneider, my sidekick, we do a couple of bookend shows every morning at NinjaTrader. And the way to find those are ninjatrader.com/events. Should be on the scroll there. And we do an early morning, 9:15 East Coast time, the opening range show where we look for trade ideas in all these markets and we talk about it and we actually throw some trade ideas in. And then again, at the end of the day, we do a bars closing show, and that's at 3:15 East Coast time. So if anybody wants to learn more, they're free. Come, you don't have to register. Go to their website, ninjatrader.com/events, and you could get the link.
Nice. All right, guys, again, smash the like for Jim. This was a lot of fun. Go check out some more shows from him. Let me try to get that link in the chat real quick. Jim, enjoy the rest of your Monday. Have a great week, and we'll talk soon.
Absolutely, Aaron. Thank you for your time. Appreciate talking to you, man. Be good.
No problem. Thank you. All right, guys, that was Jim from NinjaTrader. Everyone go check out the platform. We're going to head over to Benzinga Live starting right now, so do not go anywhere. This stream will automatically redirect you there. I will be there. Of course, we've got a nice show talking to Noggin, public company, here in a few minutes, and then we will go from that. Got Interactive Brokers coming on the show later, another public company. We'll be talking about the Credit Suisse situation. We'll be talking about Tesla being down a lot today. Talking about a lot of stuff here on Benzinga Live, so do not go anywhere.